Okay, it's a late one. Sorry I didn't get to it this weekend, but here is the weekend Monday video. The market's open, so maybe I have a little more to talk about. It's now 4 o'clock, coming up to 4 o'clock here in Western Europe. Actually, the London session is about to close in a short while, so the day is done over here, and the day is only getting started over in the US. So yeah, we do have a little bit more to talk about. I'm sorry I didn't get to it during the weekend there. I was just bummed out from last week, and I just needed to switch off the laptop for a while and not look at it. So anyway, that's done, and here we are into a new week. I think, yeah, at the end I want to show you something, but right now I think we'll just jump into the market. And I won't do a deep dive. I'm just going to do a general overview because we have tonight's update coming anyway. So on the website. So okay, so Eurodollar. This is the general pattern that I'm working with here. So we have a 5-wave move down. I'm calling that wave 1 of 3. And we have a 3-wave move up. So that was an A wave, I think a triangle, A, B, C, D, E triangle into this low here. And that low was at, I should have that low marked, but I have it on the 4 of the hourly chart anyway. So it's about 107.70. And then a 5-wave rally up to last week's high. That 113 target was always kind of the area-ish that I was looking for. And we got it. So that was great. At least one thing went my way last week, so that's good. So we've got a little bit of weakness off that top. I'm not sure whether we could call a top in place just yet, but it's a good start. So let's see if we can work 5 waves down off that top. I know that we're close to the high, that 1494 level has got a hold. And just in case that breaks, I'll show you what I am working with on the other end of that. This is the daily chart. This is going back to mid-17. So you have that move off the 103.30 level. So that 103 was the more or less 10-year low on Eurodollar. We had 5 waves up. That can be viewed as a C wave of wave B. So that means the correction is complete and we're moving down into a wave C, or maybe that's only A of that larger B wave. So if that's A, then we have a very long B wave down into the recent low. I think that was 107.70 again. No, 106. Let's get a price on that. Here I am. I was going to do a nice little short overview, and I'm already diving in. Okay, 106 about 20 or something like that. If the alternate count is correct, then we will rally back up to 130 again. So we'll get an A, B, C, and the kind of the rub here is if we get a break of that 114.97 or whatever that is, 114. Let's get down to the short-term chart. 114.92 level. If you can see that in the daily chart, 114.92. If we get a break of that, then we could be building for a larger B wave. I'm not there yet, given the fact that here we are on the daily chart and we've already hit, an extreme overbought level. The overbought on the daily chart has we've only hit these levels once in December 17, so that we have 18 and 19, and then twice in this first half of 2020. So a 2-year gap between these highs in momentum to the upside. So yeah, I think further downside would be the preferable kind of outcome here. For the moment, it's the preferable count. So let's get down to the hourly chart here. You can see that's the recent high that I'm calling that wave 5-wave rally up in wave 5 of C of 2. Now, what we need here is 5 waves down, obviously. So I'm not particularly sure yet. You could maybe, you could call that. Well, that'd be a bit bit of a stretch to call that maybe that 5 waves down, I think, to be quite honest. Maybe it's the developing first half of a move down. We shall see. Maybe this is a fourth wave within a first wave down. I'll just have to chew on that as the day goes on. Maybe we might have some clarifying action before the day is out. But anyway, suffice to say, I think for this week, I'm looking down, and we need to build an impulsive pattern to the downside to kind of give us a signal that wave 2 is done. Okay, so let's move into pound dollar. Here is the triangle pattern that I'm working with in pound dollar. We broke that minimum high. So we've got, I'll go to the daily chart. God, here I am. An A wave up, B wave down, C wave up, D, E, and that will complete wave 4, and then we'd head down to wave 5. Long-term bearish downtrend. Okay, 4-hour chart. Here we are, waves C, D, and E out in front of us. So maybe there's a possibility that we have wave C in red here complete. Maybe we won't make it as high as that upper trend line. I was kind of tentatively looking towards possible 130, but we got high enough. What did we get last week? We got 127.20. Yeah, we're close. The decline off that seems to be corrective so far. So I'm down in the hourly chart here. So I'm looking at that wave C of C. Maybe 3 waves down. We could be working on a large ABC fourth wave, and then we'd rally again in wave 5. That's what I'm allowing for at the moment. And it does look, to be honest, it looks corrective off the high. So I think this week we should clear out a correction, and maybe next week we'll rally again in wave 5 of C. And that would close out, if we go back to the 4-hour chart, that would close out an A, B, C rally in wave C. And then we'd head back down in wave D again. Probably talk about 120 again. So, the decline in wave D, although it will be probably choppy, but we're probably looking at 1,000 points. Okay, so for the week ahead, next couple of days, maybe a corrective pattern in wave 4, next day anyway. And then we'd rally maybe in wave 5 towards the end of the week. End of the week, this week, or maybe the start of next week. Okay, dollar yen. I'm looking at this would be an alternate account at the moment, but given the fact that we've kind of moved pretty impulsively off that high, I was looking for a fourth wave correction. That's a pretty impulsive move. So keep in mind, or we will keep in mind this alternate account for the moment. So that's again another triangle. These damn triangles. So these triangles, long-term triangles, seem to be dominating the dollar cross market. So if we've got a D wave high in place, and then we expect 3 waves down in wave E, I've been calling that recent low at, what are we talking? It's 105.90 or so. I've been calling that the end of wave E. Okay, but you could also view that as an A of E, so that maybe that's only wave A down, and this is only wave B up, and then we'll move down again impulsively in wave C. It will depend on how the next day or two trade goes. So let's get into the hourly chart, and I'll show you where I'm thinking here. Yeah, we've moved down pretty damn impulsively today. So if we get a break of this wave 1 high here, so I'm calling that wave 1. That could also be wave A up. 108.08. If we break 108.08, I think we could probably revert to that longer descent in wave E, so a larger 3-wave decline. And we'd look for a decline back down into that 105 level again. I think that would be down around 104 to 105. Split the difference. Call it 104.50. Okay. So yeah. I'm kind of irked by that a little bit. The decline so far looks pretty impulsive. At this moment in time, I'm leaning towards that possible alternate on the 4-hour chart. So I'll leave you that 4-hour chart, maybe a large ABC pattern down. Okay. Now 4-hour chart in the Dow. I haven't gotten rid of this horrendously bearish wave count. And the main reason I haven't got rid of this horrendously bearish wave count is because the market is so horrendously bullish, dangerously bullish. And I will show you something at the end, which I found, an article that I found so damn interesting over the weekend. Okay, so we're at 78.6. I just picked above it last Friday. We're kind of holding the highs so far. It's the previous wave B as well. So for the moment, I'm just going to hold fast and see what happens. The other count that I was talking about was that moving this up by 1 degree, maybe this is wave B at one larger degree, which would mean that wave C would probably, go all the way down. I'm still holding the 09. At the top of my mind is the 09 highs, or sorry, the 09 lows are still very possible in my mind. Just look at that for an overbought situation on MACD, daily MACD. My oh my! I mean, you have to go back to January 18, and also January 18. You have to go back to find that, and February 19. Okay, so here we are at a lower high, closing in on the probably top 5% of overbought levels in history, or at least top 10%. And this ain't no bull market. This does not make for a picture of a healthy bull market rally, I'm afraid. Okay, 4-hour chart, you can still see that I'm calling this 3 bips up in waves B in red, or 1 degree higher wave B in black. And we have a wave C with 5 waves, showing us 5 waves. Okay, so where do we go from here? Well, we got to see a move down. There is no two ways about it. This is pushed far higher, far longer than I ever expected it to go, and that has been, defeating me mentally over the last few weeks. I'm laughing at my own despair, but it has defeated me, and yet I just can't see another way out. So hey, we'll just live and learn on this one. Wait and see. The indicators point hard down. The market doesn't want to go down yet. Okay, gold. Let's move on to something a bit brighter. Hey, shall we? Here's the daily. Oh no, that's the daily. Move on to gold, for God's sake. Okay, so I think we are moving within a correction, and this could be a correction in a fourth wave of wave 5. So if wave 5 is taking us up to the upper trend channel line again, I still think we could hit 2000 before we finish this larger third wave. And there is also the possibility that this is a 1-2 of 3. So this large third wave is where the focus is on completing. I don't think it's complete yet. I want to push up to that larger upper trend channel line, and that would bring us up to all-time highs again in wave 3, and then we would correct again. But if this is only wave 1 and 2 of 3, then we have far higher to go for far longer. Okay. For our chart, you can see that we've got a decline. I was looking for a decline last week to complete 3 waves down. We seem to have that, and we've bounced this morning. So the European session has given us at least a 3-wave bounce so far. I'm looking at these interim highs here. The most interesting one at the moment is 1745. That would be a B wave high. So if we rally past 1745, then I think that'll be a pretty damn good signal that we're moving up in wave 5 of 5. For the moment, 1721 is the first hurdle, and that would be a fourth wave, I think. 1721, if we break 1721, then it'll be the first kind of hurdle for wave 1 to get over. So Tentatively calling wave 4 in blue complete, but let's get 5 waves up before we put a stamp on that one. Okay, crude oil looking for a 4th wave to complete. We've got a pretty decent move off the high this morning, so there's nothing really that we can observe here on the 4-hour chart. We'll get into the hourly chart. It moved funny, dollar declines, asset priced in dollars decline, and the other asset priced in dollars rallies. Swings and roundabouts. Markets are going to do what they're going to do, and that's that. This is a pretty high degree rally that we had here. So wave 5 of 5 of 5 of C of 4. So we're looking at 5 degrees, and it's been a pretty impulsive move off that high so far. But so far, it's only been 3 waves down. I want to see. We got to start taking out lows. So interim lows. So 36.60 is the first one. We got a previous wave 2 here at in or about 34.40. The most interesting one is this cluster of lows here around this triangle. So first one is 32.50, then we got 31.26. So we got in the space of 150 points, we got it's 180 points. We've got a cluster of 3 significant lows, and I would like to see this wave 1 come down through those lows, slice through it in 5 waves. So that's a pretty big move. I know that. Before we call a move down in the 5th wave, but let's watch the first one. Maybe 36.60 might give us a wave 1 down, and if that is the case, then we'll be looking far lower for an extended period of time again. Okay, because nothing has gone away. There's nothing. The only bullish thing for crude oil way back when we were calling for a rally back in the end of April. The only bullish thing that was going for crude oil back then was the fact that it was so horrendously oversold. Negative prices and all that malarkey. To clear up one thing, it was the contracts that were negative prices. The asset crude oil itself is always worth something. But the fact that we have rallied so far so quickly in crude oil just smacks of short covering, and we did breach into that previous gap lower, so, and that was a third of a third gap. So the fact that we filled that, I think we're pretty much ready to go again, and this will be a 5th wave. And should we say negative prices again in the somewhere distant future contract rollover? We shall see. Okay, for this week though, again, looking for 5 waves down. Let's see if we can build a bearish impulse wave to the downside in wave 1 and 2, and that would signal a return lower in a larger degree wave 1. Okay, I'm talking so much, I'm starting to get lightheaded, so let's wrap it up. Okay, the S&P is a bit soft this morning. Nothing to report here that I haven't said already in talking about the Dow. Stock market is a butcher to me right now. Anyway, yeah. Suffice to say, the daily momentum that we peaked on last Friday, hit out. Let's see. Let's get weekly. No, daily. Sorry. Daily momentum had not been breached since February 18. So February. Oh, it's 2.5 years since we hit that sort of peak in absolute madness. What madness is just the way that markets work. And I don't even know myself why I thought that we would begin to work rationally off a low or rationally off a high. But it is what it is. Okay, so this week I can't change my outlook, even though we have had a horrendously massive rally. And I'm going to get into another reason why in a few minutes. But let's get through silver first. Suffice to say, the stock market in general, it won't be your friend over the next month, like it has been over the last. And you can just call me a broken record on that one. Okay, so here's silver. 4-hour chart is slightly different to gold. I am allowing for a larger decline, not saying that we will get it, because the action has defied this larger decline so far. I mean, it's holding up quite well. I think we've got 5 waves done. This initial spike off the recent lows in March, that was 1134 or something. That seems to be a wave 1, a wave 2 correction to a higher low, then a nice 5-wave rally. So 1, 2, 3, 4, 5 in wave 3, probably triangle wave 4, and then a nice 5-wave rally in wave 5 of 1. So what have we got going on? I think it's wave 2. And we've corrected so far, but let's get into the hourly chart and I'll show you why it may not go as far as I thought. Let's see the 4-hour chart. I mean, if it's a previous 4th wave job, if we get down to the previous 4th wave, then we're talking about 1470 or so in wave 2. But I'd hold out a little bit of hope that we may not get there. If we look at the action off the highs last week, it looks like so far, if we get some sort of 3-wave B wave, if that B wave is not already in place, then we may only get down to the most recent 4th wave corrective kind of shoulder here. So that's about 1650 or 1660 or so. Even on the lower end of that, yes, 1560 or sorry, 1660. So wave 2 may be held by $16. If that's the case, well, then that would be a pretty bullish opportunity, and especially if we get a bullish impulse wave off that low. Okay, so this week I'm going to look for this second wave to complete, and let's see if we can get a bullish impulse wave off that low. All right, I wanted to just point out, I'll put in a link in the description, but this was I found so informative, this blog post by Macro Charts. I don't know the guy's name, but I'll look it up. I think it's 3 guys actually that do macro charts. They're just talking about the general position of the market right now, and where it sits amongst the previous highs that have been previous all-time highs, previous let's say bull market highs. Let's say let's take this put call ratio, which was recorded at 0.4 last week, and that's the lowest in 6 years, and it's the 29th lowest one-day print over the last 20 years. So it's a 0.6 frequency event. This is a very, very low frequency event, which means it's, as he says himself here, pure euphoria. And I could not find, if I racked my brain for the day, I wouldn't find a better way of describing the action over the last few weeks as nothing but pure euphoria. There's some pretty beautiful charts on this blog post, so I'll point to it tonight as well. I'd go take a look at that if I were you, and it'll show you where I am along with those guys. Okay, until tonight. I suppose on the website I'll see you then. Maybe we'll have something more substantive to talk about. But in general, the wave counts have held up pretty well across the markets. Just the stock market has been you might call it manipulated, but it's just been so euphoric and so hard to kill. I'm just being fed by endless streams of liquidity. But I still think the market is much bigger at the end. Alrighty, until tonight, God bless you all. Sorry for missing the weekend. Here we are Monday. Let's move into the week. Have a good one.